Hey, what's going on, crypto people? It is the Crypto Siege with another day in a life and a crazy life that is the digital asset space. I apologize for my just terrible internet / computer issues. Thank you so much for tuning in. Happy Sunday to each and every one of you. It is June 26th. It's 12:10 Central Time. I have to keep saying the time because sometimes I do these videos early through the day and I don't get them posted until later on in the day. So I want to kind of let you guys know when I am actually doing the recording. Very interesting stuff in the crypto world today. Simon Dixon of Bank to the Future to the rescue of Celsius Network, or will it be CZ from Binance? Interesting stuff. We'll go over that as well. The real deal about the crypto market and why they don't want you to win, and why they're actually trying to crash the market. We'll hear from George Gammon, and we'll hear from John Titus as well. BlackRock, we said it on this channel plenty of times. They got the speed dial, right? They got the president on speed dial, right? They got the U.S. Treasury on speed dial. They have the Federal Reserve on speed dial, and I'm going to show you proof of that as well. I think it's high time. I would say this for sure to my crypto fam. We can't afford to be naive about the war that's going on in the digital asset space. Like, we can't afford to be naive about it. And I'm going to prove to you how BlackRock manipulated this market, right? So that they could catch up. And when they're in a position where they're caught up, they can begin to impose their will on what they want. When you find out who answers to BlackRock, this is going to tell you the real story and the real war. Never ever forget that the digital asset space is a space where you and I were first, before BlackRock, before the Federal Reserves, before JP Morgan, before Goldman Sachs. We were here first. An opportunity for you and I to choose our own money, choose our own sovereign money, our own, as opposed to one that might be thrust down our throat. A digital asset space that allows us to walk away from trading our time for dollars. Got to get the real big picture, guys. I'm not sure if we can afford to be naive about what's really going on. All right, so guys, listen, this is your XRP Ripple daily news and around 0 to 10 minutes. Listen, guys, the market is doing what the freaking market does. I'll refresh this, see if we're still at a trillion, because you never know. You never know. It's just a matter of moments. We could be low. We could be below a trillion again. Well, look at that. So the total cryptocurrency market cap is at $1 trillion. It's up 1.7%. The reality is it's down from over 3 trillion in total cryptocurrency market cap, down to 1 trillion. The Bitcoin dominance is at 40.7%, 40.7. Bitcoin is at $21,365. Again, Ethereum is at $1,226. Again, XRP is at 36.6 cents. Again, look, guys, the market is doing what the market does. Oh man, Shiba Inu's up 50%. Interesting to see that. Traders delight. This is traders heaven. The swing traders. This is the swing traders heaven right now. Look at these numbers. Look at that. Look at those numbers. 71%. Look at the numbers. 40% on the 7-day. Right. People that bought the dips. People that bought below $1 trillion, right? Look at the gains there. Look at the gains that can be made there. Yeah, so definitely swing traders freaking heaven for sure. Let's go over some of the crypto Twitter stuff. And I'm gonna you want to stay tuned for George Gammon. You want to stay tuned for this John Titus that Darren Moore had on his channel. You want to understand the real deal, what BlackRock is ultimately trying to do, and you got to get the big picture that they pull the strings. They pull the strings. All right, so let's start here on crypto Twitter. This is going to, Cowboy Crypto put this out. This is pretty interesting. This is going to be the biggest deal in the history of the universe, says Tim Draper. We have never seen a technology that can potentially affect this potentially affect this many trillion-dollar industries. I can't speak this morning. You really want to listen to what Tim Draper is saying here, because this is really the reality of the world. This is the reality of the world. He's talking about crypto. He's talking about access to the greatest transfer of wealth in the history of man, and the access that you and I have, and how they're trying to change the access. They're trying to change it. And they're trying to take down any platform that continues to give you access and the potential in the greatest transfer of wealth in the history of man. That's the real deal. Take a listen to Tim. He's a funny guy.
Because if everybody, I like the idea of a government that creates a great platform for everybody to participate equally. I mean, fairly and equally. Because if everybody participates, then they all have a pretty good shot at participating in this. This is going to be the biggest deal in the history of the universe. We have never seen a technology that can potentially affect this many trillion-dollar industries. Never. And this is going to be it. And you want everybody to be able to participate. So if somehow you put a law in there that says you got to be a millionaire to participate, well, that's what the law does say. That's what it says. Wait, it is what it says. First say that.
No, it says, no.
I know where you're going. I know where you're going. Okay, I'll let you say it. I like the idea.
Yeah, so, right, because what Tim is pointing out, and a very genius way to do so, right? He's pointing out the idea of accredited investors, the idea of these pre-IPOs, this idea of giving access to a few, but not the many, is about creating an unlevel playing field under the guise of investor protection. Under the guise of investor protection. Don't know why my phone was on there. That's the real deal. Again, you got to understand that before the digital asset space, we were their liquidity. JP Morgan's, the Goldman Sachs, the BlackRock, whatever you want, whoever, right? We were their liquidity, right? They mask they mask 401ks and TSPs, right? And retirements, they mask those as something that's for you, the greater good. When the reality is they use it to keep you under their thumb. That's what it's for. That's what it's for. And he's calling them out on this whole accredited investor thing. Why not create something that's a level playing field for everyone, that is fair for everyone? Why does someone need to have $1 million of net worth or whatever it is? Why? It makes no sense. But to BlackRock, it makes a lot of sense. That's the real deal. Again, my friend, I'm not sure if we can afford to be naive about what's really going on. Simon Dixon, Celsius Network. I just wanted to report this because there's been some, this kind of reporting, this kind of half reporting about what's really going on with the Celsius Network, right? And although this is this is an uphill battle, it could be long, it could be short. It is an uphill battle. Make no mistake about it. It's an uphill battle to get Celsius to become liquid again. But it is a battle. It is a battle. And you got to understand with VCs who are pushed into this by the big banks of the world, the Goldmans of the world, to try to take down Celsius. And you got to understand that. Why? Because Celsius gives equal access. Well, just prior to this SEC debacle, gave access to everyone to participate and be able to earn money on their money. You got to understand, I don't know when it happened, but this flip of a switch, okay, the flip of a switch where we went from 85, 87% of America owned a business, was in business for themselves, to this flip now where 85 to 87% of America works for someone else. So in doing that, we became the liquidity for the elite. Trade our time for dollars, be happy with doing that, take minimum pay based upon our value, and let them win and let them take advantage of that. The banks decided, right? The banks decided we're going to stop giving you 7% of your money because you can walk away from our liquidity pool. We're going to start taking that down, start taking that down. Get right? Again, if JP Morgan can brag about making $2, $3, $4, $5 billion in a quarter in profit, and then turn around, slap you in the face, and pay you 0.01% on that, on your money. You don't think that's a battle? You don't think that's a war when a platform decides to give you 5% on your money, 6% on your money, 7% on your money? You don't understand that's a war? It's a battle? The challenge is we can become conditioned to accepting less, become conditioned to believing that we are not deserving. That's the challenge. So Simon Dixon is going to do his little thing, his part here. Again, uphill battle. Here's what he says. The only solution I know for Celsius Network with potential to make the positives whole and participate in upside is Bank to the Future's proposal. Next week, I'll share the role of community involvement without us breaching our NDA. Again, my friends, right? Simon Dixon has an NDA. Ambassadors at Celsius Network have NDAs. Alice Mashinsky probably has an NDA between him and the shareholders of Celsius Network. It's not about trying to keep you in the dark. It's not about that. In addition to that, the war is still going on. There's a battle going on, right? Just because Larry Fink's getting in front of a computer, gets in front of a camera and got a suit on doesn't make him a good guy. Doesn't make BlackRock a good guy, and I'm going to show you that. I'm going to show you the power that they yield. Who are they yielding for? You and I? You think they're wielding their sword for you and me, the average retail investor? Next week, I'll share the role of community involvement without us breaching our NDA. Sorry to be cryptic. The positors are our first priority. I'm going to go over some more Twitter stuff, then I'm going to show you more stuff where Simon Dixon reveals more truth about what's going on than people want to acknowledge. This is just probably hope more so than anything, while CZ trying to get in there and save Celsius Network. But anyway, could CZ be the man to step up to the plate? Right, he's got, I don't know, about $18 billion on Celsius liquidity issues. Simon Dixon is reportedly talking to the big guns in the industry to propose a rescue plan. Here's a big gun for sure, and that's CZ. Don't know. I do know that Simon Dixon is early investors in Coinbase, and I don't know about other places, but he's been early in a lot of stuff. So when they say BTC, Bitcoin, big players, Simon Dixon has access to them. I'm going to show you that as well. This is very, very interesting from Laurent Shapiro. And again, you got to get who owns the VCs. Like who invests in these big VCs like Andreessen Horowitz? Love seeing VCs like Chris Dixon, who were dumping their investment on retail during the bubble, get called out devastatingly by Chamath. Can't pronounce his name, but you guys know who he is. Take a listen to this.
The firm that did this the most is Andreessen Horowitz.
Firm that the most is Andreessen.
The amount of grift by so many of these venture firms in running these sketchy deals where they would put in some amount of money. This is my understanding of the scam because it was explained to me. You put in a little bit of equity at some crazy price, and then you get these tokens, and apparently there's no, like, you can just sell these tokens day one. And so what happens is, like, you price the equity, but it's meaningless because really what you're getting is the right to get some amount of these tokens. The price is crazy. You sell it, and then you just kind of walk away. And apparently, you do these deals where you just rinse and repeat this thing. Wait till that gets exposed.
I mean,
that seems like
the firm that did this the most is Andreessen Horowitz. Chris Dixon, I think, was considered like the best investor last year or the year before because of all these token returns. I gotta wonder when they go, now that people are losing money, that's when people start suing.
The amount of grift by so many of these venture firms in running these sketchy deals where they would put in some amount of money. This is my understanding of the scam because it was explained to me. You put in a little bit of equity at some crazy price, and then you get these tokens, and apparently there's no, like, you can just sell these tokens day one. And so what happens is, like, you price the equity, but it's meaningless because really what you're getting is the right to get some amount of these tokens. The price is crazy. You sell it, and then you just kind of walk away. And apparently, you do these deals where you just rinse and repeat this thing. Wait till that gets exposed.
I mean,
that seems like
the firm that did this the most is Andreessen Horowitz.
Our friends, Andreessen Horowitz. But again, is this the thing that Gary Gensler pretends he's going to do and go after and attack, or no? Right. The exchanges he wants to go after. No talk of going after Andreessen Horowitz and these VC firms who are owned by the likes of JP Morgan, Goldman Sachs, Citi. No talks about going after them. I haven't heard any. Have you heard any? Now, I know this is being pointed out because of Chris Dixon and Andreessen Horowitz and the whole ETH gate. But they were talking about, this is some other videos that they're talking about Axie Infinity and how they manipulated Axie Infinity, the game. Yeah, Andreessen Horowitz, how they manipulated the game, right? Because it was purported as a way for people who aren't, in Venezuela and Argentina and the Philippines, an opportunity to be able to make some money. And they manipulated it because they ran a scheme. And then it became a thing where the poor people had to really invest their time for dollars to try to make something. And they drove the price down, right? Drove the price down, which kind of created this vicious circle on this SLP token that really, in a lot of ways, did the exact opposite of freedom for people. It kind of enslaved them to this game. And again, the rinse and repeat thing can happen for the VCs. Lawrence White put this out. This is very, very interesting about 3AC. Remember, 3AC was one of the 5 big wallet holders of the Luna token, or UST, right? They were one of the big holders here. Did you ever wonder how Voyager was investing the USDC that it was gathering in hopes of earning the 9% it was promising to USDC depositors? Voyager Digital said it lent out 15,250 Bitcoin and 350 million in USD coin to Three Arrows Capital. Do not forget who owns Voyager, right? The company initially asked for a repayment of 25 million USD coin by June 24th, and then asked for the entire balance to be paid June 27th. These loan amounts to 666 million based on Bitcoin's current price. Neither of these loans has been repaid, it said. This is from Lawrence H. White. Well, a lot of the reason, and it was, the alarm bell should have went off for me with Celsius Network when they announced that they were going to let Ape, kind of do the, in these fund rounds, they were going to let kind of, the VC kind of get into it, even though they said they weren't going to get in the way that they normally get in, where they control the board and, they make all the decisions and the company doesn't get to make decisions. That to me was kind of like the downfall, because previously the fundraise were just the Celsians. To me, that's kind of like it was the downfall of things happen to Celsius Network, because now they're beholden to people who really aren't really looking out for the depositors. Bill here says, Attorney Bill, I like to say, Jimmy J finally put this out. In the library case, the SEC has filed this reply to library's opposition to the SEC's motion for summary judgment. Bill, the attorney says, at Belisarius 2020 on Twitter, says, thanks, James. Does making a payment for LBC really satisfy the first prong of the Howey if it is required for consumptive use? It needs to be in an investment, and it needs to be in a common enterprise. As library has shown evidence of consumptive use, the SEC is being oversimplistic and disingenuous, go figure, in stating that library has connected the first two prongs of the Howey test. This is the SEC's attempt to try to capture sales on secondary markets that are not sales or offers of sales by library itself. It shows a case theory that ignores issues such as whether a blockchain is already fully functional and decentralized, or a token has utility. It is super broad. On this theory of the SEC, Bill Hammond and the 28 attorneys who supposedly advised him or had an input in the speech were all wrong, as the SEC's case theory in the library case would definitely capture Ethereum. Yeah, it gets bad. Now, I just showed this video, but John Deaton kind of responded to that. I said, watch Gary Gensler get defensive with Tim Draper when Tim Draper confronts him with the draconian and oppressive rules defining what constitutes an accredited investor. It's truly disgusting how Gensler and the so-called elites want to hold people down. Some interesting stuff about Celsius. Celsius now continues to buy, sell on the market, 1.3 million last week. FTX has already almost drained most of the sell from other exchanges. 1.3 million sell will be bought this week, enough to clear the entire FTX order book. This is in relation to the attack on the Cell token. Which video do I want to start with first? Let's find out kind of get more and more about the real deal of BlackRock and the kind of the power that they yield. Darren Moore did this great video here titled "The Shady Dealings of the Fed Explained" with John Titus, and he's going to point how BlackRock fits into this. Forgive me for my internet issues. Hopefully, it will play.
John,
I'm great, Darren. Nice to meet you.
Nice to meet you too. So I have a few questions for you. Can you describe the Going Direct plan in Jackson Hole 2019 and how that changed how the Fed implements QE?
Yeah, so that Jackson Hole is the annual meeting hosted by the Kansas City Federal Reserve, which is one of the 12 districts of the Federal Reserve. And every year they host this meeting of monetary and financial bigwigs. And in 2019, they held it around August 22nd. And at that meeting, a big company called BlackRock, I'm sure you've heard of it, they have $10 trillion in assets. BlackRock presented a plan called, I think it was called Dealing with the Next Downturn, but it colloquially became known as the Going Direct Reset. And the reason for that is the plan said, and keep in mind, this is August of 2019, so
come on, internet.
There's no repo crisis yet. That's a month off. And there's no pandemic yet. That's, 4 months off or so. And in the plan, BlackRock says to the Fed and to other central banks around the world, you're going to have another downturn. It's inevitable. And when you do, you're out of room to deal with the crisis through conventional monetary policy, meaning you've already lowered interest rates down to zero. You're going to need a new trick. And what you're going to need to do is you're going to need to find a way to get public money, meaning the reserves, because it's really the public authority that the Fed has to gin up and create new money in the form of reserves. You're going to need to find a way to get the public money into private hands. And up until that time, the Fed hadn't really done that in any significant volume. And after that happened, after that plan was presented,
get that money, get the public money, the people's money into private hands. Get the people's money into private hands, like their hands.
Presented by BlackRock. The Fed, sure enough, there's a repo crisis, and then later a much bigger crisis in the form of a pandemic. And really, in March of 2020, that's when the Fed goes just ballistic, buying new treasuries and buying new mortgage-backed securities. But this time it buys them from non-banks. And that's a big deal. It buys all of them from non-banks. And that's a big deal because if they're buying a bond from you or me, a non-bank, or from a hedge fund, which is a non-bank, or a retirement fund, which is a non-bank, it's tricky because non-banks don't have accounts at the Fed and they can't accept reserves. So if you want to sell $1 billion bond, the Feds could offer you $1 billion for that bond. It's not going to do you any good because you don't have an account at the Fed. $1 billion in reserves does you no good. So what the Fed does is it says, okay, well, what we'll do, Darren, is you transfer your bond to us. And in order to pay you, what we'll do is we'll transfer $1 billion in reserves to whatever bank you bank at. And when your bank gets the $1 billion in reserves, it leaves your bank in a position where it now has an imbalance on its balance sheet. It's got $1 billion of new assets, but doesn't have $1 billion in new liabilities. And that's where you come in. That's how you get paid. The bank will then create a $1 billion account in your name, which is a liability to a commercial bank. That's just how our banking system works. Legally, a banking account, a checking account at a bank is an IOU. And so now with that new $1 billion account in your name, the bank's balance sheet balances out. And what's happened, the net effect of that transaction is you have $1 billion in new reserves created, which is really what everybody concentrates on when they look at the Fed's balance sheet. But also, due to your bank being used as an intermediary in that transaction by the Fed, there's $1 million of new bank money floating around in the system. And that is when the Fed created $3.5 or $4 trillion starting in March of 2020, it also, as a side effect of that, or really the primary effect of it, the collateral effect was a $3.5 or $4 trillion also in new bank money. There are two bank money circuits in the U.S., but the only one that really matters is the retail circuit, the bank money circuit. That's the one that counts. And before the Fed got going in March 2020, the retail bank money supply was about $13.5 trillion. And when it was all said and done, it was more like $18 trillion. And that's where your inflations come from. But that was all foreshadowed and all anticipated and all expressly called for by that going direct plan by BlackRock in August of 2019.
Yeah, and the Fed's supposed to be independent, right? And I saw congressional hearings where they're asking Powell about BlackRock, and he's like, they handle some of our accounts, and I mean that's like the exact opposite of what the Fed's supposed to be. They're supposed to be, independent of everything.
Well, when they say independent, what they mean, they're using it in the sense of the legal sense of independent agency means it's independent from the executive branch. When the Fed uses independent, what they're trying to say is we're independent of Congress. We don't answer to Congress, and that's a bunch of nonsense. The Fed was created by Congress. It's a creature of Congress. It could be shut down by Congress overnight. It could be audited by Congress. And that's what they mean by independence. But you're exactly right. They're not independent. They answer to BlackRock. I mean, they allow BlackRock to come in and to tell the Fed what assets to buy, including assets being sold by the Fed. So think about that. The Fed.
They answer to BlackRock. This independent thing, supposedly, they answer to BlackRock. And again, I ask you, is BlackRock looking out for the interest of you and I, the average retail investor? Or do they have their own interests? Very, very important to understand that and understand the real deal what's going on with the Federal Reserve. That's just the reality of it. I'm going to let you guys listen to George Hammond. The title of his video is The Truth About the Crypto Crash. The truth about the crypto crash. Let's see if I can't tune this up the right place here. I'm going to start right here. I'm going to start. Let's do right there.
Through their framework. Well, I think they look at this chart and say, aha, there is the answer. If we can somehow bring down asset prices or decrease the net worth of average Americans in aggregate total, we can bring down the CPI without it having too much of an effect on the overall economy and potentially pushing us into recession. And if we do go into recession, it will be very mild. Again, their words, not mine. So I think the game plan is to raise interest rates just enough to make it seem like you're going to get really tough on inflation, like you're the next Paul Volcker. But don't raise them too much to where you break the economy. And then while you're talking tough, this makes the market believe that you're going to continue to raise interest rates, maybe up to 4 or 5%. So then especially risk assets, start to sell off, like the NASDAQ, the S&P, and definitely cryptocurrency. So how will this bring up unemployment to a level that in their minds would start decreasing the CPI to a point where it's politically palatable going into the midterm elections? Well, I think that one of the big reasons we have a labor shortage right now, and one of the main reasons the unemployment rate is so low, is because people have made so much on their stock portfolio or on cryptocurrencies, or their home equity has gone up to a point where they don't have to go back to work, at least not right now. So if you bring down asset prices, now all of a sudden they're in a position where they have to go back to work. So you turn a labor shortage quickly into a labor surplus. In fact, I heard a great story the other day on one of my favorite podcasts that gives an example of this potentially playing out in real time. It was a story from a restaurant owner who said he lost all of his employees to this boom in cryptocurrency. Because when they would leave, when they would quit, he would say, "Why are you quitting? You've been a great employee for the last year, 2 years." They said, "Because I've made so much in cryptocurrency that I'm going to take some time off."
Now remember this, right? Remember, we just watched with John Titus, right? And George earlier, George Gammon said, right? The net worth GDP is the worth that you and I have as the average retail investor. They want to bring that down. They want to bring that down. And here is a prime example of why. Remember, I said earlier in the video, the flip switch, and I forget what year it happened, but we went from 80 to 85% of people having their own business, mom and pop, small type businesses, right? 85%. That's flipped around to now 85% work for someone else, right? We became their liquidity pool. Digital assets has the opportunity to flip that back around. And they don't want that, right? Restaurant owner has employees. The employees, because they made choices to choose their own money and participate in this new asset class, got themselves in a position where they no longer needed to trade their time for dollars, no longer needed to work for someone else. Right? Prime example. And the market crashed. And you got to think, who is causing the crash? If the Federal Reserve answers to BlackRock, and in 2019, BlackRock said, you got to change this stuff around, get all this public money out of the hands of the public and into the hands of the private. This is what they said, according to John Titus, was said at the 2019 meeting. We can't have the average retail person, the average Joe and Jane, walking away. We need them back trading their time for dollars. We need to get their money out of their hands and into our hands. You got to get it. That's what they want. Why is the Federal Reserve? You got to ask yourself, why is the Federal Reserve, right, answering to BlackRock? Right? Why is that happening? And you got to think about another thing like this. And it happened. These restaurant owners left. Bitcoin's doing great. It's doing amazing. Right? And all of a sudden, the crash happens not once, but 2 times. And these guys have to go back to work. And George Gammon tells you that. Yeah.
But now all of a sudden, let's say the last month or so, he's seeing all of those employees come back to work and ask for their old job. So
it's as simple as that, my friends. It really, really is as simple as that. Got a meeting, Federal Reserve, some other people, BlackRock's there, telling them, you got to flip this around. You got too many people. You got too many. This whole new 1% thing is becoming more and more of a reality. We can't have that. We can't have that. We can't have a new 1%. People choosing to their own money. People walking away from the daily grind is where they're able to spend more time with their family. We can't have that. We need more people trading their time for dollars for us. A couple updates here on what's going on with Celsius, Simon Dixon, some stuff here. Just want to share with you guys. I think I shared here this news here. The only solution I know for Celsius, this is from Simon Dixon, the CEO and founder of Bank to the Future, a private investment firm. The only solution I know for Celsius Network potential to make the depositors whole and participate in upside is Bank to the Future's proposal. Next week, I'll share the role of community involvement with us, not breaching our NDA. Depositors are our first priority. Again, I get it, uphill battle, but if someone's trying to do something, and I want to he also kind of let us know some other stuff. He says here, here's the scoop from CoinDesk. Anthony Pompliano and Mark Yusko's Morgan Creek Digital are trying to put together an alternative rescue package for BlockFi. BlockFi is not Celsius, in my opinion, but they do try to provide interest to depositors on their money. Why? FTX official $250 million credit line stood to wipe out BlockFi. I challenge you to Google who owns FTX, not just the person, but the people invested behind it. Simon Dixon says, I love the free market. So much better than the crony capitalism, government bailouts. Here's another thing I want to put. Bitcoin, big guns are discussing Celsius network plan. The biggest guns in the sector. I'm pushing for the best, but still preparing for the worst, as TradFi, traditional finance, are all over this, trying to bring down the likes of Celsius, provided up until this recent SEC investigation, it provided a level playing field for people to earn money on their money. Bank to the Future's lawyers are working on how we can leverage our shareholder rights to support depositors. Just want to let you know that there are things in motion, that things that they're trying to do, right, to try to pull this through. Because Simon and obviously shareholders in Celsius Network realize the value in the depositors, whereas traditional finance is trying to take it down. Again, if we have less of an option to earn money on our money, we have to go to them. If we have less options to earn money on our money like we used to do, then we'll have to go to them and hop right back into their liquidity pool. Again, it's just, I'm not sure if we can afford to be naive to the real deal. The real deal. Like 401ks and IRAs and self-directed IRAs, if you will. If you don't own the product, you don't own the product. And you don't own the product. 401ks, IRAs, you don't own them. More updates to follow, but the word from my source at Goldman Sachs, says Simon Dixon, is there is no Celsius Network deal with them. Again, more updates to follow, but the word from my source at Goldman Sachs is there is no Celsius Network deal with them. Take it for what it's worth. It's fake news according to them. This is not coming from Celsius Network. I will reveal what I can, when I can, and remain in keeping with NDAs. Again, my friends, it is time for the good guys in this space to understand that we cannot afford to be naive to what's really going on and the bigger pictures. It's war going on. And the war is for you and I. They want to usher us back in to their liquidity pools and put that foot right back on our neck and be dependent upon them and their product that best serve them, as opposed to us being able to freely choose the money that we want to choose. And then have our money work for us and walk away from nonsensical things like draconian concepts like accredited investors. All right, guys, look, I'm going to wrap this up. This has been this is the wrap of my XRP Ripple Daily News in around 0 to 10 minutes. I hope it has been valuable to you. Please hit the like button and share this video. Let more people, we need a new 1%, guys. Let more people know and understand what's the real deal, the bigger fight, the bigger picture. They want us to war with one another, bro. That's what they want. They want you and I to war with one another so that we can become distracted so that they can implement their plan. That's what they want. They don't want you and I to be free, independent, having our own money, being able to have the ability to take care of ourselves, and God forbid, take care of other people who are less fortunate than us. They don't want that. They do not want that. All right, guys, look, do me a favor, hit that like button if you enjoyed the video. If you enjoyed the hangout, hit the subscribe button and ring that notification bell. Please consider subscribing to the channel. And so that you know when we go live, when we do upload any videos. I'm going to end this video like I do all of my videos and remind you guys of this. Old money doesn't want you to win. They don't want us to win. They would rather that we remain a cog in their perpetual wheel of trading our time for dollars. They don't want us to play in the same playground that they play in, where we allow our money to work for us. This is our chance to win, guys. The digital asset space is our chance to win. We are in the midst of the greatest transfer of wealth in the history of man. Are you participating, or are you standing on the sidelines? Here's what I do know, that the battle for you has already been fought, and the victory is yours. Go get it.